Okay, thank you so much, Traders Talk Live, for organizing this Investors Summit, Trading Tips and Techniques. I think it's just terrific that traders get to come here and really learn something new every time there's a summit, and this is a good example of that. So thanks for inviting me. So I get to share about a topic that I am just so passionate about. I've been doing this for a very long time. My topic today is navigating the markets with Elliott, Fibonacci, and Harmonics. And maybe it sounds daunting, maybe it sounds complicated, but hopefully we'll try to keep it a little bit simple for you to understand. My background started on Wall Street. I was an institutional trader in the Forex markets, and actually I learned all about Elliott Wave analysis early on. So we're still doing this today. Why? Because it works. Disclaimer, please read this to yourselves, and then we'll get going. That's me. I just like to show my book, The Trader's Pendulum, The 10 Habits of Highly Successful Traders. I love this book. I don't know if I'm going to write another book. This is quite a task. And this is an excellent book. It was released at the tail end of 2015, but traders are still buying it today because everything in it applies today. The New Trader's Guide to the Business Psychology and Hype in Trading. We are not going to talk about the book today because we're talking about Elliott, Fibonacci, and Harmonics. We are going to talk about the convergence of these three superpower analysis techniques, Elliott Waves, Fibonacci, and Harmonics. We are also going to do live market analysis on the euro, the S&P, and gold. And I'm going to give you an opportunity to join our Elliott Wave desk where you can have an Elliott Wave analyst by your side, which is really how it was when I was trading at the bank. So just a little bit of, I guess, just a little bit of context. First, we do analysis as part of our 3 pillars of trading success. And the analysis includes primarily the Elliott Wave analysis. And then we pick a strategy. Our strategy is the Wavy Tunnels Pro, but I'm going to show you a 3-point checklist for another strategy that is terrific that you can use right away in your trading. And then the third pillar is coaching and accountability. It's really important to be part of a trading community with like-minded people so that you can share your successes, share your results, post your trades, etc. It's really important to do that. I've always thought that. Otherwise, trading can be kind of lonely, and I'm sure you can relate to that. With the analysis, we do analysis in order to understand the big picture. And what is the big picture? What are we talking about? Are we in an uptrend? Are we in a downtrend? Or are we moving sideways? The easiest way to get into a trade in an uptrend is when we are in an uptrend and not to pick a bottom, right? It's easier to make money when the market has already moved, when it has momentum, and that's what we try to do with our confirmations and with our convergence of these 3 superpower analysis techniques. The 3-point checklist for trends and end of trends, that's what we're going to show you with confirmation. Removing the emotions is key. So it is really, really important to have a strategy that you can use. I need to discuss this 8-wave cycle, the trader's roadmap with you. On the left, focus on the left. That is the Elliott Wave 8-wave cycle trader's roadmap, where we see waves 1, 2, 3, 4, and 5. That would be the trend move. And within the trend move, we have waves 1, 3, and 5 moving in the direction of the trend, and waves 2 and 4 moving counter trend. So what that means is, if we are still in the trend, you could certainly look to buy at the end of wave 2 for the wave 3, buy at the end of wave 4 for the wave 5. The other thing that we notice with trends is that if you draw your channel lines around the trends, most of the time the price will not exceed the channel lines. If it does spike above or below, it quickly goes back within the channel lines. And then on the right side of that 8-wave cycle, we have the 3-wave correction. This is a simple zigzag correction, ABC. There are other types of corrections, such as a more shallow correction, like a sideways correction, but this is a zigzag once we've completed the 5-wave sequence. Not all Elliott wave patterns are ideal like this, but when you see an ideal pattern like this, that you recognize, that's when you should jump in, because you see the pattern that you're recognizing. Now, I had an aha moment about a year or two ago. I can't remember exactly when now. Time flies by so fast, doesn't it? If we look to the right at the harmonic pattern, that's just a harmonic pattern, X, A, B, C, D. And we could actually overlay that harmonic pattern on the entire Elliott wave roadmap. So the trend would be the XA leg, and then the ABC Elliott correction would be the BCD pattern. So if there's anybody out there who trades harmonics, start to change your, focus on this a little bit more to see if actually there's an Elliott wave pattern there. So I just wanted to show you that as a little bit of background. And keep an open mind for a paradigm shift. Old ways won't open new doors. Keep an open mind for what I'm about to share with you. And if you're new at this and it seems complicated, that's okay. Just keep coming back. It'll sink in eventually. This is something that I've used for 35 years, and I really think it's important to understand the market cycles, to understand when we're in trends, when we're in sideways markets, and to almost have I don't like to use the word crystal ball anymore. I used to say it because but to have a vision for the future. And of course, with the vision, meaning the Elliott wave counts, that's fine as long as we use confirmations to enter and exit the trades. So let's focus on the strategy now, the 3-point checklist. Going back to the trader's roadmap, the left side, the 5-wave move. What do we have when we're in a trend? What do we want to see? Well, that's on the right. In a trend, we see oscillator convergence. That's the first thing. That's when price makes a new high, and so does the oscillator. Price is within the channel, and we see 1, 2, 3 continuation trades. What that means is we have a wave 1 and a wave 2, and once we take out the top of wave 1, that's called a 1, 2, 3 pattern. And then within the wave 3, we might have some setbacks, some pullbacks, some retracements, and as soon as we take out the previous high, that's called a 1, 2, 3 continuation. When we have the wave 4 pullback and we take out the wave 3 high, that's called a wave 1, 2, 3 trend continuation. So now we understand the terminology. Let's look at some examples after we discuss the second 3-point checklist for the change in trend. We're now looking at the right side in the green box, the ABC correction. What do we see at point T for the change in trend? First, we see divergence between the wave 3 peak and the wave 5 peak. And divergence means that we have a new price high and the oscillator doesn't make a price high. Then we have a trend line break. So we have a trend line break beneath the channel lines connecting the trend. And then we have a 1, 2, 3 reversal. So that would be our confirmation that the trend has actually turned around. So now let's look at some examples. This is the Aussie yen. And this is a trade that one of our students did and posted. So I'm going to show, I'm going to show what he posted as well. What we see is, for the trend, we see oscillator convergence. Now, you might say, where's the oscillator convergence? Well, if you look at the first part of the downtrend, we have the oscillator moving down with the trend, but then it does reverse, and then we actually, when we have divergence within and where we don't come back to the 0 line, that just means that it's taking the wave 3. So this is, we have divergence for the end of the wave 3 before the wave 4 correction. And then we have the move down for the wave 5. Prices within the channel, and we see the black horizontal lines going across for our 1, 2, 3 trend continuation trades. And that's mostly found on the wave 3. The end of the wave 1, of course, that's the first, and that would be just a 1, 2, 3 reversal, and then down the line for 1, 2, 3 continuation. So if you have the Elliott wave count in mind and you see these pullbacks, you can always enter a trade during the wave 3. It's a very safe place to enter a trade because wave 3 is usually the strongest move in the trend. I want to tie in finding the end of the trend to harmonics. What if we add a harmonic pattern to the wave 3, 4, 5? 3, 4, 5. And let's just go back to this little picture. What we're saying is, what if we add a harmonic pattern on the left instead of for the whole 5-wave, well, 8-wave sequence, we add it within the wave 3, 4, 5. So we just look for a pattern within that. Let's go back to the example, and we're going to put our harmonic pattern on the wave 3, 4, 5, and it comes up with a crab pattern with these targets, 72, 47. Now you are doing the harmonic pattern when you have the XABC, and then it projects the point D, right? So the XABC projects the point D. And you already have, these are Fibonacci relationships. Fibonacci ties together harmonics with Elliott wave analysis. And this would be one of the targets for this crab pattern. This is what our student posted because he too came up with his own analysis and actually took the trade up here at 75.95 and legged out of this trade all the way down to his target for his point G that he calculated. And what that means in terms of dollars and cents, when you plan a trade like this, you plan the trade and trade the plan. So the entry at 75.95 and the target at 73.56 produces 239 pips, which is a lot in Forex. When you make a trade for 239 pips, that's a terrific month, okay? Or week, or 2 weeks, or 3 weeks. It's just a terrific performance. Now, if you exit the, now wait a second here. Let me just go back up for a second. Okay, I think I have a typo here. I'm pretty sure I do. It should be 72, price 72.44. Okay, so if you have 100,000, a standard lot, that would be $2,260 profit on that trade. For a mini $10,000, $226, and for a $1,000 position, $22.61. So I'm just showing you what the potential is for the P&L. I think I skipped something here. Hang on a second. Ah, okay. Yeah, okay. 73.56, 74.56, 79. Right. So this is for the target at 73.56. There's a typo there. There was another pattern, a crab pattern, that actually came lower than the other pattern, and that target would have been 71.44. Now, had you taken profits along the way, you wouldn't make that amount of profit. Like, what we recommend is to take profits along the way, but if you kept your full standard lot, you would make $3,300. And some traders actually try to really keep their positions, but we don't. We tend to take profits along the way, probably at 3 different positions along the way. So the profit wouldn't be as much, but it depends really what position you would take. This is one position, riding it all the way. Let's look at the change in trend now, and let's look at another example. So just to review, change in trend, you want to see divergence, trend line break, and 1, 2, 3 reversal for confirmation. So now we're looking at the weekly chart of the Euro New Zealand. The trend move is apparent on the left within the magenta lines. We see oscillator convergence. The oscillator keeps moving up with price. Price is within the channel, and we have nice trend, 1, 2, 3 trend continuation moves with the black horizontal lines going across. So you can always take trend continuation moves once you have your Elliott Wave roadmap and you follow the roadmap. When we get to the end of the trend, change in trend, the 3 steps, we look for divergence. And we have divergence between waves 3 and 5 because the oscillator makes a lower high. And that just tells us that the momentum is running out of steam. And when the momentum is running out of steam, we could be ready for a correction, move in the opposite direction. Now, this is the weekly chart. We also have a trend line break on the weekly and a 1, 2, 3 reversal pattern, which we can't really see on this time frame below the trend line break. So I'm going to move down to a daily chart. And this is the same chart, but the daily. So right here, you can see some consolidation, but we really do need to go down to the 4-hour chart in order to see what this means. So we go down to the 4-hour chart, and there's our 1, 2, 3 reversal. I often say start with the bigger time frame so you can get the perspective, you get the big picture, and then move down to the 4-hour chart to actually take the trade. If you're more of a short-term trader, a day trader, a short-term swing trader, medium-term, short-term, medium-term, then you might be looking at the daily chart, and you might go down to the hourly or the 15-minute to take your trade. So this would be the trade entry for the 1, 2, 3 reversal for this New Zealand dollar, this Euro Kiwi trade. And we moved down quite substantially, right, before the market reversed and turned around. And you would also draw your channel lines around the move down and exit somewhere in here once the market turned around. Or you could leave 3 profit targets and find out what the target is beforehand. So I just want to show you also that I took a harmonic pattern on the weekly chart, and it looks like we are nearing some nice resistance up here. So this is something for you to take a look at. We have a very long tail on the weekly chart. We reversed that a little bit today, but I would definitely take a look at this pattern here for another move down. This is the EURUSD. It's a 15-minute chart. I want to get to the analysis too. We have plenty of time. So you can do this on a shorter time frame as well. This is a 15-minute chart, and I've drawn. It's not today, okay? It's just an example from before. And again, we have the price within the channel. We have oscillator convergence. We have the purple line for showing the oscillator convergence, right, within the trend, oscillator convergence, and then 1, 2, 3 trend continuation points. Now, one thing that traders, I find that some traders are almost afraid to take the trend continuation trades, thinking, well, what if the market stops and turns around? Well, just think about it. You're not going to be profitable 100% of the time, and there's no room for perfectionism in trading. So if you've taken like the first couple of trades, let's say the first 3 trades, and you've made positive results, and then maybe you take this trade as well, and this doesn't work out so well at the bottom of the green 3. It doesn't work out so well, so you'll lose 1 trade and you'll make money on 3 trades. The important thing is to keep your stop losses small and to ride your profits. And that's what we do in our service. We have 30 pip stops, but when we ride our profits, some of our profits are 100, 200, and even 300 pips. And you can make money even if you have a 50% win-loss ratio. That means that you would that you lose 50% of the time. If you keep your losses small, then you can have a profitable trading book. And that's how we manage our trade alerts in our service that I'm going to share with you after I show you some analysis. What happens? We have divergence here for the end of the change in trend. 1 divergence between waves 3 and 5. We have the trend line break, and we have the 1, 2, 3 reversal on this Euro 15-minute chart. So this simple strategy works very well on all time frames and all markets. And what if we add a harmonic pattern to the wave 3, 4, 5? We can do that too. This is a shark pattern, and it actually gives a target for the wave 5 at 1.13 times the XA leg. So that's another confirmation. All right, I'm going to move to live markets now. And why don't we start with the euro? Okay, why don't we start with the euro? These are straight from our Elliott Wave desk service. And this is the euro. This is the 4-hour. So what are we expecting on the euro? This is the 4-hour chart. Wave counts can be a little bit daunting, especially if you're new with the wave counts, and that's why we have a daily video to explain all of the wave counts, and you will be able to see the 8-wave pattern on the biggest time frames. That's the easiest place to see it, and then that would be your roadmap. Or on the smaller time frames when you're trading a wave 1, 3, 5, a 5-wave sequence followed by a correction. But I'm just going to share with you our view on the euro. So our view on this euro is that over here we did a black wave 3. This is an ending diagonal pattern. You can't really see it from here. And then we have a correction. It's a WXY correction. It's a complex correction because it's WXY instead of ABC. It just means that you have a few ABC corrections linked together, right? So the W is an ABC, and then you have the X, and then you have an ABC for the Y. So right now we're working on the wave B of the Y leg. Okay, if we go here, here's the W, red circle W, red circle X, red circle Y is up there. The target would be around the previous high. That's the target. And then we would look for places to sell the euro. But down here, we're looking for a 3-wave correction. This is our, on our software, if you say, what is the projection of B versus A for the zigzag? So that would be the orange B. 78.6 would be this level right here. So we're looking for the euro to trade down a little bit and then perhaps to turn around to make that last leg up. Where would this be invalidated? This would be invalidated if we trade below this low. Okay, so all Elliott Wave strategists have an invalidation point, and that would be the stop loss. That's what the invalidation point is, 110.52, this previous price low. Okay, so once price trades down a little bit, then you could go to a smaller time frame and do the same analysis that we did today. You can't see it on this per se because we're trading this leg, and you would want to see draw your channel lines and see a 1, 2, 3 reversal from that point. So that's the euro. The S&P, I'm going to start out on the weekly chart just to get more of a perspective. Okay. So this is the weekly S&P, and we're still bullish on the S&P, and you can see that we're bullish because we have the wave 3 up here. So one cycle higher, the wave 3 red circled up here, and right now we're working through the wave 4. So the wave 4 as an A, B, C, that would be the correction for the wave 4, looking for lower levels and probably, you know, close to the previous low, and then we'll see how it goes down there, and we would look for some kind of our reversal pattern to go long. Okay, so that's our wave count on the S&P. If I go down to the daily, let's open up some of the waves here. Not too many. Let me go down to the 4-hour, and then it's better. Okay. The wave C is always a 5-wave move. So it would be wave 1 in green, wave 2 in green, and we're waiting for this move to start for the wave 3. Okay, so that's the S&P. And why don't we do gold now? We'll do gold. This is the daily gold chart. So gold, I should show the weekly on gold because this is very interesting. Let me just clear some of these wave counts. Okay. Actually, hang on a second. Okay. This was very interesting. This is the monthly. I should try to draw here. Let's see. So if I draw, oh, that's not such a nice line. If I draw here, the market, I know we were looking for a breakout of this trend line by connecting the tops and connecting the bottoms. We have a nice little sideways move, and we were anticipating a move above. So these are some of the patterns that you can look for. Also, whenever we have a sideways move, we really spoke about the trend move, drawing the channel lines, but you can also draw lines, trend lines connecting the tops and bottoms of the corrections. So wave 2 is a correction of the wave 1, right? Here's the wave 1 and here's the wave 2, looking for a wave 3. So we broke out. Now let's move down to the smaller time frame. Okay, that's actually the monthly where you could see that. Okay, so this is the, let me just go down to the 4-hour again. So this is what we're anticipating on gold. We are expecting another move up for the wave 5 to complete, to really go a little bit beyond this wave 3 or even at this 3 to double top. Then we would look for a correction down for the wave 4. And there's one rule in Elliott wave analysis that if you look for a wave 4 correction, look at the previous wave 4. So the previous wave 4 is right here. You can see that in the red circle 4, right? So we would look for a move down to this level. If you didn't buy gold, that would be a level to look at to buy gold once we move down to this level. And then we would see a continued move up to complete this 5-wave sequence in magenta, right? And that would only take us to wave 3 in blue, and then we would do another correction for a wave 4 that would take us higher. Let me see if I can just go down to the, open up the weekly and just see, yeah, okay. So this will give you a better idea. Move down. This is our magenta moving down. Then we make another high, and then we move down again. Again, the blue will visit the 4th wave of the previous degree, and then move up again. So and then down for the 4 and up for the 5. So we have quite a move, an anticipated move higher for gold here. So this is one that you can watch. Lots of opportunities here. Let me see if I can show you anything else. Let me see the dollar yen. The dollar yen was interesting. I just want to show you again what patterns can do. So this is the weekly chart. Let me just get rid of some of these wave counts. I don't mean to show you, the point that I want to make is more the pattern than the wave counts themselves. But the pattern is a triangle, and you can see anyway the wave counts for the A, B, C, D, E in green. And this is another trade that we were anticipating because we were following this triangle. And what often happens when you see triangles, and it can be on a very big time frame like this, or it can also be on a 5-minute chart. But a triangle is a beautiful pattern because once we break down out of the triangle, we usually retest, and then there's another move lower, right? So now we're consolidating. We don't see anything to do at this point. We're waiting for another move up in a wave B, because this is the wave A. We're looking for the wave B higher, and then a wave C down. So we wouldn't necessarily sell at this level. But that's the triangle pattern. And here you can see on the daily that we're expecting another move up for the wave B. Okay, anything else that I can show you today before? Now, you might ask, well, that's great, you have these wave counts, so how can I see the wave counts on 16 different markets? Well, I'm going to tell you about that. We have, when I traded at the bank, we hired an analyst right off of the exchange, off of the CBOT, and he brought with him a strong, keen interest in Elliott wave analysis and pivot points. As you probably have heard, that pivot points were developed by the floor traders on the exchanges. So we had him sitting on the desk, and every single day, because we were in the trenches trading, every single day he would hand out a one-pager with his analysis. And during the day, if we saw things or if we had, what's going on here, he would pipe in and tell us what was going on, because we did not have the time to do the analysis ourselves, like this, for example. So I structured the FX Trader's Edge and the Elliott Wave desk around having our own analyst by your side, so that you could get reports every single day and videos on 16 different markets. And I'm going to show you that with the markets that we offer. And with a video explaining exactly what we think is going to happen and what the next move might be and how you can take advantage of it. And in fact, our Elliott Wave strategist actually puts his money where his mouth is, and he actually takes the trades that he is recommending in these videos and has an amazing track record for the last 2 years that I'm going to show you. So I want to share with you that, but why don't we just do one more, let's just do one more market. Let's just keep, okay. Just a second. Why don't we do oil? I just want to show you oil. Some of you might be following oil, so I'm just going to show you oil. Let me just, yeah. Okay, this is the big picture. Let me get rid of some of these wave counts for you. Hang on. This is a big picture. We had a big drop, and then we had a nice three-wave correction, right? Moving up within the channel, and we actually caught some of this move down. So what's happening now? We had a strong move down. We have to think ABC. For a magenta A wave B up, and now we're looking for a continued move down. The first target would be the previous low. Like that is really, that's our target because we're very conservative. And if we take a trade, that's our target. That's our conservative target. If you take 3 positions, you can exit 2 of the positions before that target or the second one at that target and keep a 3rd position open. That's up to you. But that's our conservative trading, the way we do it. So this is the weekly, again, looking for the move down. Let's go down to the 4-hour and just go within the waves. I'm going to just show all of the waves again. Yeah, so we've started the 5-wave move down, 1, 2, and we're looking for, this is a nice 1, 2, 3 continuation pattern that we spoke about, right? You draw your line right here. This is the 4-hour chart. If we go below it, you can take the trade, or you can, if we go below it and retest it, I mean, this is our 1, 2, 3 continuation trade on oil. So now let me show you more about our service. Okay, we just showed live markets. Want to know how to enjoy a full month of analysis on your favorite markets for free. For free. We had a special going on during last week, and I urged my team. I said, you know, I'm speaking at an event today, and I really want to be able to offer them the same thing that we offered our students. So this is really very special. We never do this. In fact, we really haven't done this at all until now. So we're offering you the ElliottWaveDesk.com/start. The Elliott Wave Desk will help you amplify the performance of your trading while tearing down the barriers that are constantly holding you back from that next level. Why? Because you're going to have an analyst by your side. How cool is that? Every step of the way. Take your trading to the next level with an Elliott Wave analyst by your side. The Elliott Wave Desk is a high-level program for those people looking to amplify the performance of their trading. And let me tell you what you get. And you see it says here for the price, first month free, then it renews at $75 a month unless you cancel. This is what you get. You get daily analysis on 16 different Forex, cryptocurrencies, commodity, and stock index markets, providing the clear context to spot the best setups and make pips week after week. So we use the CFDs. If you're trading futures, you can use this analysis on your futures markets as well. The euro, the pound, the Aussie, the dollar yen, the New Zealand dollar, and the dollar Canada. Those are the currencies. The Dow, the S&P, NASDAQ, Russell, and DAX, those are the stock indices. And I think we're going to be adding the FTSE. The 10-year U.S. bond, gold, oil, Bitcoin, and Ethereum. These are given to you every single day. You will see the daily, the 4-hour, and the 1-hour charts right in the members area every single day with a video explaining. Okay, so daily report and daily Elliott Wave video. Plus, I have JODY's desk, and once a week, I will show you a neat little strategy. Yesterday, I posted a strategy using the ATR, a day trading strategy. How you can use a day trading strategy, which is excellent, in combination of the Elliott Waves. So every week I'm posting a video to show you something special. But this takes the cake. Trading signals, trade ideas. You can get your trade ideas by SMS or Telegram. And these are the results. In 2018, these trade alerts made 3,048 pips. And this is documented because I said that we take these on a real account. And then 2019, it's up 1,300 pips so far. So if you risked 1% or 2%, and so 1% is a nice amount to risk, on a $6,000 model portfolio with our parameters, because we actually made 78.6% if you annualize that in 2018. If you risk 1 to 2% per trade, the results equal what we have there. Now, this is hypothetical because our results didn't produce this because we were risking less than 1%. We were risking between 1/2 and 3/4%. So we show you how to manage the trade and we give suggestions, but every single trader manages it differently. I can tell you that right now from what we're hearing from our students. Some traders really, do much well. They even increase the trade if they like it, and others are not doing as significant as this. It doesn't matter. You're learning and you're making money at the same time. So ElliottWaveDesk.com/start is where you can find this. And I guess I have 2 minutes left. I don't know if there are any questions. I don't know if there are any questions, but this is just really a fantastic service where you have your Elliott Wave analyst by your side. So no matter what strategy you're using, this will give you the context, the top-down approach. And I know some traders always ask me, well, can I day trade with this? Absolutely. And I showed you a strategy that was, that you would definitely want to take a look at if you sign up for your 1-month free trial. Definitely take a look at that strategy. I posted it yesterday, and actually I took the trade myself. I don't think I said that in the video, but when I was looking yesterday, I said, whoa, I'm going to take this trade. I took the trade myself, and I actually got out at the target that I mentioned in the video and showed you exactly how we did that. But I didn't say that I took it. I just showed a methodology for you to use. So let me just see if there are any questions. Right. There is a question for the E-mini futures. You would want to look at the S&P. And yes, you would definitely want to look at the S&P. And you could look at the daily analysis for sure, the daily, the 4-hour, and the hourly. Absolutely. So I think my time is up, but I want to say thank you so much. I look forward to seeing all of you in our free month with the Elliott Wave Desk. I'm excited to have you. Please send me an email if you sign up, and let's continue this conversation in the Elliott Wave Desk. Thank you so much, Traders Talk Live, for inviting me today. I really enjoyed myself.